Hi guys, and welcome to the second edition for 2022 analysis. So the first video that we talked about, or in fact the one that I uploaded I think it's 2 weeks ago, something like that, most of those analyses have come to fruition, and it was spot on, especially on Euro GBP, dollar index rally. Most of those came to fruition, and also NZD USD. So what I'm going to do today is I'm going to do an in-depth analysis on dollar index. So yeah, don't expect Euro USD analysis or Pound USD or the other majors in this video. Those ones I'm going to do tomorrow. That's your Monday's video, which I'll upload tomorrow before market close. So first things first, when we're going to talk about dollar index, I've been following the COT numbers, commitment of traders, and nothing much really has changed in regards to positions being held by either the non-commercials or the commercial traders. Yes, the non-commercials have seen a slight reduction in their short exposure and long exposure, meaning they've taken profit the past 3 weeks. They've been taking profits on both their holdings. Now, the commercials, they only took profit the previous week. That's the week of 18th of January. The week of 25th of January, they didn't take profit on either positions, meaning they've added more positions, but they added more on their short size, though it's just a small, tiny number of 201, and they've added more of plus 93 on their long exposure. Now, when we have those numbers, what is it that you are supposed to come up with in terms of your bias? Remember, the commitment of traders report only aids you in understanding where dollar is really going on a longer time period. So we can see that the non-commercials, which is the banks, the insurance companies, those big hedge funds, they are really taking profit either side for the past 3 weeks, meaning there's like an indecision coming through from those guys. And the commercials, they've added a bit of a long exposure from last week, which is not much, from 1684 to 1777. That's not much of a big deal, but still it makes good data to have when you're doing your analysis. So from the number on the COT report regarding dollar index, slightly looking to the upside, though we might hit a bit of a wall in the coming week or 2 weeks, right? Meaning dollar might face a bit of a resistance or a pause during this strong uptrend that it has been on, which is to be expected. It has to reaccumulate before another push to the upside. So that's regarding the COT report. Then when we look at the upcoming week's calendar, so I always use investing.com, guys. That's the one I use for my calendar to see what's coming up in the following week regarding the currencies that I'll be looking to trade. So when we look at this week, right? Today's Sunday already, so that's the beginning of the week. We've got Monday coming through, and I'm going to focus on the fundamentals that I expect to affect the dollar. Remember, you don't want to saturate yourself with a lot of data that you're not going to use, right? So now, focusing on dollar index, I would like to see mainly euro and dollar fundamentals, right? So for Monday, The only crucial fundamentals that I have for Monday regarding dollar and euro is the German CPI, inflation news from Germany, the GDP for the Eurozone, and the Chicago PMIs and FOMC member George speaking. That's what I'll be focusing on. And also take note. And if you are new to the group, guys, take note that Monday is a day that we focus on understanding how we can trade the rest of the week. We need to see Monday's price action in order for us to understand how we're going to make decisions to either short or go long on certain assets. So then come on Tuesday. We've got German manufacturing PMIs and German unemployment change. And we also have manufacturing PMIs from the United States and the job openings. They are definitely going to move the dollar. Then Wednesday, as we drop to midweek, we've got CPI, inflation news for the Eurozone. We've got year on year, month on month. Year on year is going to be crucial because they're forecasting a very lower number here for the euro. And if you want to understand what the number means, you just open on the fundamentals. You just click on it, then it's going to open a separate page. That's by default. Now you should understand that. So a reading that is stronger when it comes to the CPI news for the euro, a reading that is stronger than forecasted number is generally positive for the euro, while a weaker than forecasted reading is generally negative. Now they're forecasting 4.3% on the year-on-year inflation number. So if this number comes out lower than 4.3, that's a weaker reading, meaning bearish for euro. Bearish for euro, what does dollar do? Dollar rallies to the upside. Euro USD falls to the downside. Then we also have the ADP non-farm employment change. That's for Monday. And we've got the OPEC report and crude oil inventories. That's for Wednesday, guys. So by that time, we would have already seen a market structure on dollar index for Monday for us to be in a position to react to all these fundamentals. Yes, I'm going to go deep into the top-down analysis for dollar index and what you have to expect to do at certain levels or price points. Then Thursday, we also have we've got ECB, right? ECB is on the calendar on Thursday, and I don't expect them to change their interest rates, but I expect them to give a bit of a fight in regards to what we have seen dollar doing last week when we had FOMC on the calendar, when we had the Fed on the calendar. So I expect the ECB to really back also their currency quite strong. So I expect a fight from the euro during that news release. Then we've got initial jobless claims for the dollar. Then Friday, also have manufacturing PMIs for the month of January. That's non-manufacturing PMIs. Remember, on Tuesday, we've got manufacturing PMIs. Then come Friday, we've got the most important one, the non-farm payrolls, right? The non-farm payrolls, a reading that is stronger than focus is generally supportive, bullish for the dollar, while a weaker than focus reading is generally negative. Right now, the focus is sitting at 155K. Last month release was 199. Remember, this number missed by big time. So for you to understand or to have a bit of an idea on what number to expect, this is where you need to follow through with those initial jobless claims that come out every Thursday. These initial jobless claims, they come out every Thursday. The moment you get more positive release for the initial jobless claims, the non-farm payrolls, they are most likely to be also positive, vice versa. Then you've got the unemployment change rate for January. That one is also crucial. So be that as it may, when we look at the calendar, there's quite a few fundamentals that you have to be in position to react to when you are trading. It's not just a case of opening your trade and then you forget about it, or just open without looking at what the calendar is telling you. Now, that's the calendar. We know what to look for. Now, when we come to the dollar, right? Of course, we've seen dollar rally big time because of what Powell said during the FOMC minutes that came out last Wednesday, and it was to be expected. We've been talking about this, guys, that dollar is bullish. So any dip to the downside must offer you great opportunities to go long. And you can see 3 weeks ago, dollar dipped into discount, filled the fair value gap, and then rallied to the upside during FOMC, right? During the Fed rate decision. Now, what you need to know, what you need to understand is that the interest rates, they are driving the markets at this moment in time. The Federal Reserve is driving the markets at this moment in time. So what then do you need to look out for? You need to understand the long-term interest rate market. How is the 10-year yield performing? How is the 30-year yield performing? How is the 5-year yield performing? Any divergence on these long-term interest rate markets will help you in your decision on what directional bias to take regarding the dollar, right? So we've got the 5-year, the 10-year, the 30-year, the 2-year, the 20-year, but I like to use the 5-year, 10-year, and the 30-year yield long-term interest rates. So what we're going to do is we're just going to look at the weekly close for the long-term interest rate markets so that they can help us in understanding where dollar is going. Now remember, during the week, should be week 1 on the interest rates topic, money seeks yield. Money always follows the yield. So that's what we're going to do now. We're going to look at the weekly close for the interest rates, long-term interest rates, and then we compare them side by side, and then we try to see if there's any interesting price action that we need to have a look at and help us in deciding what to do. So I've just put my long-term interest rates here, the 5-year, the 10-year, and the 30-year yield note. So we just want to see whether they are all in agreement of their price action. So we can see here the 10-year. Okay, I'm gonna go to I'm on a weekly chart here, correct. Okay, my 30-year does not want to load. I'm not sure why. The 30-year does not want to load, but already you can see between the 5-year and the 10-year, we've got the 5-year long-term interest rates. We've got a higher high on the 5-year, and then on the 10-year, we've got a lower high, right? Now remember, they're supposed to be in tandem, right? The moment you see divergence like this, the moment you see divergence on the long-term interest rate markets, you should know that there's a huge move or a change in market direction that is coming. Okay, the 30-year does not want to load, guys. Remember, I'm doing this live, and I always like to use live charts so that you guys, you get to understand. I don't want to use hindsight data. I always like to use Yeah, the 30 year is not loading. Let's see if we can load a daily chart. I'm just gonna pause the video and then I'll continue once the 30 year has loaded, because this is crucial for whatever I want to discuss here. Right. So the 30 year finally responded. The chart was not responding. I don't know what's wrong with investing.com. So you can see the 30 year also has got a new low formed, just like on the 10 year, right? We've got a new lower, higher low, right? We've got a higher high on the 5 year. We've got a higher high on the 5 year, and then we've got a lower high on the 10 year and a lower high on the 30 year. Now, what does that tell us in terms of market structure? Now, remember SMT divergency. That's week 2, if I'm not mistaken. SMT divergence gives the notion that whenever this happens, when we have this divergence forming on the long-term interest rates, yes, dollar is bullish. We're not gonna disregard that, but we need to see some bit of pause in the market. That rally that we saw last week, there should be a bit of a reaccumulation, and that is what the long-term interest rates are telling us right now. So if I go to a daily chart, right, I'm gonna go on a daily chart on all the three um, interest rates so that you can see what I'm trying to tell you guys. So you can see the 5 year here, it's got a high and a higher high. Then if I come to the 10 year, right, now I'm on a daily chart, right? The 10 year, we've got a lower high, we've got a high and a lower high. Then the 30 year, same applies, right? We've got a lower high and a higher high, right? Once this happened, you can see what happened the following day in the interest rate markets. We had price moving lower, right? Thursday and Friday, the interest rate market saw a bit of a decline. Now, did we see that on our dollar? If we go to a daily time frame, Thursday and Friday, there was no decline. Take note, guys, this is a proper in-depth analysis, which I normally do just like once a month, right? So since we're at the end of the month, I'm going to do this so that you also practice to do the same each and every month. So did we see any decline on dollar on Thursday and Friday? No, we did not. Yes, correct. That did not happen. But the rally that we saw on dollar had already been shown. The footprint for that rally already happened on the interest rate markets during FOMC. So money seeks yield. Dollar did not decline for the last 2 days of last week. So what I'm expecting on the dollar, right? I'm expecting the dollar to have a bit of a correction to the downside before we see another further push to the upside. Now, when I say to the downside, to which levels should we anticipate dollar to trade to? Number one, we've got fair value here, right? We've got a zone of fair value which price can retrace to. Now, this one is the third in line. The second in line after this fair value gap here, after this liquidity void, is this old high. See this old high, guys? Do not disregard that old high. Now, why do I say so? I'm going to highlight it, right? Okay, let me just change this quickly. I'm going to highlight the old high. It's coming in at 96.88. Now, if you remember correctly, the video that I uploaded 2-3 weeks ago, 9688 was the level that I said it's going to pave way for the bulls on dollar. Once we break above 96.88, then we really don't have much that can stop dollar to trade to almost near to 97.91 and also the 99 price point. Nothing much is really gonna stop it. Why do I say so? This liquidity void here, price will look to fill up this liquidity void. That paves way for dollar rallying all the way to 100. Now, do we have anything on the calendar or fundamentally that can support that strong move to 100 on dollar? Yes, we've got number one, interest rates. They are definitely gonna increase the rates, the Federal Reserve, probably a couple of times this year. So expect a very strong dollar all the way up until probably August, September. Expect a very strong dollar. But that does not to say that it's not gonna trade to the downside, guys. But overall, dollar is set up for a bullish run for the year. You see, dollar is set up for a bullish run for the year all the way to 100. Now, that's number one, the rate. Number two, the quantitative easing that the Fed has been doing, the confirmation of an earlier rate hike, clearly supports a very strong dollar. Now, markets may not stop to crash up until at least maybe 50 basis points hike is priced in. All right, the market might not stop the crash, but we've got US inflation news, I think in 2 weeks' time. And if those numbers miss, that could change big time. This whole notion of a strong dollar could change. So you need to be very nimble. Stay nimble because right now the Federal Reserve is in a risk management mode, and it is more to likely disappoint the dollar than the latter, where we're saying dollar is bullish. So stay nimble, guys. You need to be in a position to change your bias quickly in respect to what the Federal Reserve is doing. So right now, dollar is bullish. We are looking for long rallies to the upside. But for the coming week now, guys, the coming week, I expect dollar to pause a bit, as in to trade to the downside and reaccumulate in fair value for another push to the upside. Already the long-term interest rate markets, namely the 5-year, 10-year, and the 30-year, they are already showing us signs that expect a correction to the downside on dollar. Right? So I'm gonna go to the chart. Right? I'm gonna go to the chart, and we start on the monthly chart. Now I'm gonna switch to my line chart. Now you can see why I was saying nothing really is in the way for a dollar rally to the upside. I'm gonna mark this level here. We've already passed that level quite a long time. And then what else is of interest here? Of interest is where price is currently. This was the level which was broken to the downside before dollar was so weak. And then that is the current level that we are at, which is 97. All right. So that's my monthly line chart. And you can see when I come here, the 95.82, we have long gone left that level. We broke above. Then we've got the 97, which is like a pivot point. Price always gets attracted to it. find support, rallies, find resistance, drops. So it's crucial that we take note, because that is where we are, and we only have 1 day left in the month for this candle to what? To close this current monthly candle. There's only 1 day left, which is tomorrow, Monday's price action. Now, on this monthly chart also, we've got this level here. I'm going to change this color. Need a grayish, light gray, almost does it well for me. So we've got a fair value gap right here, right? We've got a fair value gap on the monthly chart, and I'm expecting price to fill up this gap in the coming month also. I really don't see it facing too much resistance around the 97 price point, but towards the 97.80, yes, I expect price to face resistance. So you can see the low of May 2020, the low is coming in at 97.93. Those are the levels where I expect the dollar to face a bit of a stiff competition. But the moment this whole interest rates thing keeps on going and going up until March the 16th, I think that's when we're going to get a new rate hike. Then expect dollar to really be on a strong push to the upside. So this is what I'm looking at. These are the areas that I'm looking to target. The draw on liquidity for dollar right now. The draw on liquidity for dollar right now, I can most probably put it at the mean threshold of the fair value gap. The mean threshold is coming in at 97.75. So expecting dollar to be attracted to 97.75. That is the draw on liquidity for dollar index right now. And to the downside, is there something of interest on the monthly chart that I may have to look at this moment in time? Yes, there is only one, and that is the two equal highs that we broke above. Remember, these two equal highs are the ones that are coming in at 96.88. These are the 96.88 equal highs. They will be crucial once we go to lower time frames for our long entry. So what we don't want to see tomorrow is Monday's candle closing below 96.88, because when that happens now, dollar might drop big time to the downside, probably to reaccumulate all the imbalances on the daily time frame since last Wednesday. So now I'm going to go to the weekly chart. Now on the weekly chart, you can see my draw on liquidity, where I'm anticipating dollar to trade to this week. We're looking at 97.75. That's basically a very strong dollar, right? But now remember, we've got the calendar. Now on the calendar, positive news, say for the euro, then dollar is bound to find resistance, and depending on where it's trading during that fundamental release, then you make a decision. I'm going to illustrate once I get to say H4 time frame. So take note of the fundamentals. So you can see here how we traded above 96.88. That was a clear weekly close above. Now, when this new high was breached, we had a new high formed, and we've got an old low, right? So that's a swing low. Then we've got a new high, which hasn't been validated yet as a swing high. But when we put our fib levels so that we can see where is our discount and where is our premium range, right now we need to be looking for a discount range for our entries. I wouldn't advise you to trade to the downside on dollar. I wouldn't advise you to short dollar at the moment. Any price moves to the downside, any drops to the downside on dollar index, when they drop to discount, that is now your opportunity to go long on dollar index and shorting pound USD, Euro USD, NZ USD, AUD USD. So you can see here the swing point that we have, swing low, swing high. We've got our equilibrium coming right at 96.08. Now, this is an ideal discount zone for you to be looking for long entries. Already we've got our last down candle here, which is now our bullish order block. And for us to see dollar to trade to this level here, if that happens, leading into March's Fed rates decision, this will be an ideal long entry zone, right? But this zone is way down, guys. Don't expect dollar to trade lower to these levels next week. No, I'm just highlighting you for future outlooks so that you know that, okay, once we return to this level here, ideal scenario is for us to go long on dollar index. So this is the discount range. Now I'm gonna get rid of that because I'm not using it right now. I was just illustrating to you folks. So we breached 96.88, and right now price is trading inside this block here, right? This block here, price found a bit of resistance, which was to be expected on Friday close. Price had to at least drop to the downside. But when we go to the daily chart, now take note of the 96.88. What you would want to see in price is for 96.88 to hold once price returns. What do I mean by hold? You don't want to see what can I say? You don't want to see price dropping into this level, right? And then close below. When that happens, that's a clear indication that market is reaccumulating for another push to the upside, right? When that happens, you wait, right? Now, this candle close can happen either on H4 or D1, right? H4 break and close below, then expect this imbalance to be filled. You expect price to trade and fill up these imbalances. Now, remember, the candle close below 96.88 is only going to be facilitated by a strong release from either the ECB or negative release for the United States dollar, right? Any positive news release, those high impact news, any positive euro news release, then dollar should see a bit of a downside movement. And if it closes below 96.88, then there's nothing wrong in going long on Euro USD, but make sure you do not have too much risk on that trade, because market can turn and rally to the upside on dollar instantly. So 96.88 is crucial in the upcoming week. So we need to see if we do get a close below for a short-term base to come on dollar index. Other than that, what you need to see is a break in structure to the downside. Is most probably price closing, trading below, but closing above, right? When that happens, your focus remains on this swing low to swing high. Break and close above, then you're looking for longs that are going to break above Friday's high, right? Longs that break above Friday's high on dollar index results in shorts that will break below Friday's low on Euro USD, right? So 96.88 is our crucial price point for this upcoming week. Now we need to see Monday's price action, how Monday is going to react. We need to see how Monday's candle is going to close. So that's your assignment for tomorrow. Make sure you take note of how Monday's candle trades and close. Yes, market can even open and then rally to the upside and never give anyone a chance to react or to be in a trade or something. When that happens, then you wait for any fundamental release. Then let me go to the calendar. You wait for a fundamental release, right? And there is quite a few on Monday that might really move the dollar. Number one is the FOMC guy who's speaking tomorrow at 22.8. Then we've got for the euro, the GDP number for the euro. And GDP year on year is quite high. Their focus is 4.7%. I'm not sure if this is going to come out positive. Year on year GDP for the euro. COVID year on year. Yeah, but it might. And then quarterly GDP forecasting 0.3%. So take note of those two release for the euro. That's tomorrow at midday. They're definitely going to move the euro and in turn the dollar. So that's your assignment for tomorrow. Take note of D1 close on dollar index. So now I'm going to go to H4. Now on H4, what we can see on H4 is we've got our 96.88 level here, where we have this fair value gap. That is a discount range, right? That is our buy zone for the dollar. Now I'm just going to go to Euro USD H4 so that you can see what I'm trying to imply here. We also have the same setup on Euro USD. You can see we've got this fair value gap on H4, but if you remember correctly how we discussed this in class, we had this old low here, right? Market took out the sell stops on this old low. Sell stops were taken out. This old high cleared above. Market comes back into the order block that was left by the liquidity run, the manipulation, then price was finding a bit of support. Now, if you go to a lower time frame, right? I'm going to go to a lower time frame. What you have to take note of is the break in market structure. Right now, we only breached these old highs and traded into this fair value, and then price dropped. Now, can you see how price reacted when it came to this block here? Right? This is our last down close block. Now, this block is going to offer long entries, regarded that we get positive euro release. This level is going to offer us long entries on euro USD, say from around $11.33, $11 with a target set right somewhere around $11.08. So that's most probably around 40 to 60 pips on offer on euro USD tomorrow, or we can go as high as $11.9, even $12. So that's 60 pips on offer from $11.34. There's 60 pips on offer right now on euro USD, but those 60 pips will only be valid. You can only trade long for those 60 pips. I'm not saying all of them, but the moment you enter a long on euro USD from $11.34, say from a positive GDP release, your target should be anywhere between 40 and 60 pips, because you're expecting dollar to drop into this fair value, and most probably now 22.8, where you get that FOMC member guy speaking, then dollar might find a bit of support and start rallying for the week again. You see, that's how you have to link the two together, the chart and the fundamental. So regarding dollar, this level here is a level of discount which will offer great buying opportunities on positive release for the dollar. But on negative release, then don't expect these levels to hold. Expect price to trade to the downside on negative release. Expect price to trade lower, right? So yeah, that's I think that's pretty much what I wanted to discuss with you guys, to outline on how we can react to what the market is going to do in the following week. So expect another volatile week again. So just be careful. Don't risk too much. It's the start of the new month and we've got great opportunities right now in the markets. But if your equity is a bit low, please do not risk too much. And if you have any doubts or if you have any clarification that you need from what I've been talking about here regarding dollar, you can send a message on the group. Then I can attend to it, or you can even private message me if you're shy to send on the group. You can private message and then I can attend to that question. So another in-depth analysis now for our week will be uploaded tomorrow. That's around just before market close. Once I've seen Monday's price action, that's when I'm gonna do the weekly analysis video. This was just to highlight, this video here was just to highlight what I'm really expecting dollar to do in the coming quarter. So as for Monday on dollar, I'm expecting a down close candle based on what we saw in the long-term interest rate markets, the divergence, the SMT divergence that we have seen in the long-term interest rate markets. So you can clearly see the divergence which is here, guys, is we've got the 5-year redistributing, right? And then we've got the 10-year redistributing. Then we also have the 30-year redistributing. What does this tell you? Now remember, distribution, redistribution, that is weakness in the interest rate markets, of which that weakness, I'm expecting it to be portrayed or to be mirrored on dollar index come Monday and Tuesday, or even the rest of the week. You see, I'm expecting that to be mirrored on dollar index. That is to say, we should get at least a bearish close on dollar index. Whether it's Monday or Tuesday, I'm not sure. We have to wait and see. But you can already see the indecision that we got on Friday. So yeah, that's pretty much about it in regards to dollar index, our outlook for the next month and a half. So that's February leading into FOMC on March 16. I am pretty much strong bullish on dollar, but stay nimble, guys, because the Fed might disappoint these dollar bulls for a while up until they're back also on the stage, which is March the 16th. So yeah, if you have any questions, guys, make sure you send them to the group. And for those of you who have not subscribed to the channel, I urge you guys to subscribe, please, so that every time I upload a video, you get it straight into your inbox. And make sure you've got the notification bell icon selected so that you don't miss any uploads that I put on the channel. I'm gonna do my best this year to record quite a few materials that I'll be putting on YouTube. It's the best medium for us to communicate, especially with those guys that are not in Cape Town. So yeah, I wish you guys good luck and happy trading, folks. Do not do not be scared to trade. Happy trading. Losing is part of the game, but make sure you do not lose all. Smart money sells in up moves and buys in down moves. Have a great week, folks. Thank you.